Now, how does the Fed play into the setup overall? That's going to be a key as well. Now, we're going to bring the discussion to the committee overall. Jim, I'm going to start with you first. If this is going to be a year end that's going to close out with double-digit gains for the third year in a row, can we make it 4? How much of this year has been about the Fed? How much has been about AI? We know it's a combination of both, but what's been, in your mind, the biggest driving force in why we've seen the gains that we've seen?
More than anything, Dom, I think it's earnings and earnings growth. And, you know, we think back to the very beginning of the year, and there were some questions, and particularly after Liberation Day, a lot of estimates came down on specific stocks, on the markets overall. And those fears were really found to be unfounded. So, you know, with regards to the Fed, okay, we got the rate cuts we wanted. Frankly, I'm of the belief that the Fed should not be cutting rates anymore from here. I mean, to state the obvious, we had 4.3% GDP growth in the third quarter, and the fourth quarter is shaping up to be pretty good as well. We've got profits looking next year like they're going to grow 15% year over year. You know, I just don't see the need for the Fed to cut rates anymore. Now, I say that, but we both know the politics that are out there are such that the Fed is likely to cut once, maybe even more than once in the year to come. But to me, next year is not about the Fed. It's about earnings growth.
Bryn, what do you think about this? I mean, this is going to be a stretch, and right now strategists are kind of proclaiming on a median forecast basis that it will be another double-digit percentage gain in 2026 as well. Do you feel as though this is justified given what the Fed has to deal with right now with the jobs market and inflation, and given where the AI trade has gone and where it's come to since then?
I think we have these ingredients, and Jim started to hit on them. Earnings, clearly, you know, over the long term, earnings drive returns. But you also have monetary and fiscal policy are moving in the same direction. And so to dig in on that, I do think that we'll have 1, maybe 2 cuts. I agree with Jim. We should probably stay from there. But then also from the fiscal side, with the OBB coming into the economy, no tax on tips, the depreciation, less regulatory control, especially over hurdles on the regional bank side. You know, and so you have these different ingredients on top of earnings, and then you have GDP, which we got a very strong print, and we can all dissect whether it was healthcare calls or what have you. But we know that data center build out is around 40+% of GDP growth. I think that probably kicks up and is the same, if not higher, next year. So we have these ingredients where you continue to have a constructive stock market because of earnings and a constructive economy because of all the things I just walked through. So I think it's hard to be overly bearish at this point because of all of these ingredients that are coming together. And don't forget, Dom, midterms are next year. The White House is going to want to have a really good economy, and not just for the rich, but for everybody. And so I think you're going to continue to see them really pushing hard on having a strong economy during the midterms.
Kevin, let's bring you into the conversation here. What do you think? Bryn makes a number of good points, as does Jim, about what the potential, at least positive catalysts are for next year. Do we feel as though there are any cautionary signs we should be watching out for?
Yeah, I mean, investing is easy. It just goes up all the time. Why would there be anything cautionary, Dom? But the reality is we have to worry about inflation, because if we see rate cuts and it begins to resurface and reignite inflation, then the party's really over, because we can't have a Fed, and I don't think we will, regardless of who sits in the chair or how dovish we want to be. To Bryn's point, to Jim's point, maybe we get one more cut next year, whether we need it or not. But I think the idea that we're going to get rate cuts and a cycle continued of rate cuts is unlikely. And if inflation does spark back up, then it's not a rate cutting story, but instead a rate hiking story. So that's where my concern is. We talked about the AI trade. It's carried us for 3 years now. I think it can and will continue to do so in 2026, which is crazy when you kind of think about 4 years running. But the reality is that this, although everything's cyclical when it comes to spending, I think this is just a longer and stronger cycle with regards to AI, and it benefits a broadening out into a lot of other sectors. So can the market continue without just blind AI optimism and a Fed cutting rates? Yes, I think being cautiously optimistic is the right way to go into the new year.
Jim, I see you kind of nodding your head along.
Well, you brought up to Kevin, are there risks out there? And Bryn was starting to touch on this when she brought up the midterm election. There are risks out there. Now, I feel like every year this time I say the same thing, expect volatility in the year ahead. I definitely said it last year, and what did we get? The max drawdown, Dom, like 3% this year? So wrong last year. But consider, as I say it again this year, consider you've got two really big Supreme Court decisions coming up. I mean, really big. And if, as is expected, the Supreme Court rules against the use of the International Emergency Economic Powers Act to institute tariffs, that's going to throw the markets and the economy into a little bit of a tizzy. Now, it's a little bit of a tizzy, and it should be temporary because there are other statutes that the president can use. But that trade policy uncertainty, Dom, is going to ramp up again. So that will probably cause some consternation. Then there is, of course, the Lisa Cook potential firing that the Supreme Court has not really tipped its hand as to which direction it's going to go in. But if she is fired, or if the Supreme Court upholds that President Trump can fire her, I mean, Katie bar the door, he's going to fire anybody who doesn't cut interest rates. And to what Kevin was just saying, cutting interest rates, we do it too much, and we definitely will have an inflation problem.